ABSLI Nishchit pension plan. Will investing in this policy help you in your retirement period in the long run? Let us find out through an in-depth analysis in our video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. Before analyzing whether the ABSLI Nishchit pension plan will be a good fit for our retirement portfolio or not, let us first understand a few basic details about this policy first. So this is a non-linked, non-participating individual pension plan, and some of its key features are: you have a guaranteed corpus which accumulates on your retirement, helping you secure a regular income for your golden years. You can even build your own plan by choosing between the varied premium payment terms and pension plan policy terms available under this policy. It also offers financial protection for your loved ones equal to total premiums paid accumulated at a fixed percentage during the policy term, and the guaranteed additions in this policy accrue periodically during the policy term to build your retirement corpus. The loyalty addition is added at the end of the ABSLI Nishchit pension plan policy term to further boost your retirement corpus, and you have the flexibility to defer your vesting benefit by up to 10 years. So these are some of the features available in this policy. Now let's take a look at the benefits available under this policy. First, we will take a look at the death benefit available under this policy. So in the event of the unfortunate death of the policyholder during the policy term of this policy, the death benefit shall be the higher of any of these two options mentioned on the screen. It can either be the sum assured on death or the surrender value acquired by the policy till the date of death. So whichever value is highest at the time of death of the policyholder, that will be given as the death benefit to the nominee or the legal heir. So the sum assured on death refers to total premiums paid to date accumulated at a guaranteed rate of 6% per annum, which was compounded annually, or the 105% of the total premiums paid to date. So whichever option is highest in value will be used as a sum assured on death under the death benefit. So there is something called guaranteed additions also. These are defined as a fixed percentage of your total premiums payable, which gets accrued and shall be paid on the date of vesting. So for a limited pay policy, guaranteed additions accrue at the end of each policy year starting from the end of the policy year following the premium payment term till the date of vesting, that is till the end of the policy term. For a regular pay policy, guaranteed additions accrue at the end of the policy year starting from the end of the first policy year onwards till the date of vesting, so that is till the end of the policy term. So these are the guaranteed additions available under this policy. There is something called loyalty additions as well, which is also a fixed percentage of total premiums payable, which will be added to your vesting benefit and payable on the date of vesting. And what is the vesting benefit we get in this policy? So if you have survived till the end of this policy term, then your vesting benefit will be defined as the sum of the following. You will get your guaranteed vesting benefit plus accrued guaranteed additions till the end of the policy term, plus if you had accrued any loyalty additions, it will all be given in total as your vesting benefit. So these are some of the benefits available under this policy. Now let us take a look at the advantages and disadvantages that are present in the ABSLI Nishchit pension plan. So first, let's take a look at the advantages. So you have the option to defer vesting benefits for a deferral period of 1 year to 10 years from the date of vesting, which can be convenient for you. And also there is guaranteed additions, loyalty additions, which can also boost up your retirement corpus. So these are some major advantages in this policy. Now let's take a look at the disadvantages. So as a disadvantages, there is no loan facility, there is no maturity benefit. Only the benefit which is vested at the end of the policy term is given to you as a vesting benefit, but there is no maturity benefit. So these are some of the drawbacks in this policy. So now, as we have understood basic details about this policy and also how this policy briefly works, let us now move on to the analysis part of the video, where we are going to conduct an IRR analysis, which means the internal rate of return. So we are going to conduct the internal rate of return analysis of the ABSLI Nishchit pension plan. So just for the calculation purpose, let us assume a 35-year-old male pays an annual premium of 1 lakh into the ABSLI Nishchit pension plan. So the premium payment term available in this policy is 10 years, while the policy term spans 25 years with a vesting age of 60 years. So the death benefit is 15 lakhs. So this policyholder pays the premiums for the first 10 years, and the benefits along with accrued guaranteed additions and loyalty additions vest at the age of 60. So this is termed a vesting benefit rather than a maturity benefit, meaning you cannot encash the benefit at the end of the policy term. So in this scenario, the vesting benefit is 39.37 lakhs. So what is the IRR? What is the internal marginal rate of return, the returns we get in our hands at the end of the day. So according to the ABSLI Nishchit pension plan maturity calculator, the IRR for this cash flow is 6.82%, which matches the inflation rate and might even pursue you to invest in the ABSLI Nishchit pension plan. However, the numbers we have arrived at are notional, since the benefit is not directly available for you to use. You cannot utilize it for your personal goals or invest at your own will. Instead, you're required to purchase an annuity plan commuting up to 60%. So the accumulated corpus is then invested in an annuity plan at the prevailing rate, which is not part of the ABSLI Nishchit pension plan. So this restricted type of situation often leads policyholders to reject the ABSLI Nishchit pension plan. All retirement plans consist of an accumulation phase and a distribution phase, but the ABSLI Nishchit pension plan focuses solely on the accumulation phase, leaving the distribution phase out of its scope. So to address this limitation, let us explore other alternative investment opportunities and consider analyzing a comparative analysis just to see what other investment products or other investment strategies are available in the market which can fetch us better returns and better benefits compared to the ABSLI Nishchit pension plan. So what we are going to do instead is we are going to separate life cover and investment, like accumulation and distribution phase. Like for that purpose, we are going to separate the life cover and investment separately and invest in it separately. So just for a fair comparison, we are going to choose for life cover a pure term life insurance policy with a sum assured of 15 lakhs, which costs an annual premium of 15,900 rupees. So the policy term here is 25 years and the premium paying term is 10 years. Except the premium we pay, policy term, the premium term, the sum assured, everything is kind of similar to the ABSLI Nishchit pension plan. So after paying the insurance premium in this policy, you will have 84,100 rupees left from your 1 lakh annual premium which you used to pay for the ABSLI Nishchit pension plan. So here what we are going to do with the remaining amount is we are going to invest in it. So you can invest in it according to your risk appetite. We have chosen in this scenario for a ELSS mutual fund, an equity fund for our retirement corpus accumulation. Why we have chosen ELSS mutual fund is because of its track record. Usually in equity, if you choose to invest in it for a long term like 7 to 10 years, the market cycle would also get completed and you will get a little bit more stable and better returns. But in ELSS mutual fund, it also has a track record of backing up the claim, because it has consistently proved us that if you choose to invest in it for more than a 7 to 10 years, it can provide us with 12% per annum according to its track record. So potentially it can do that. According to the track record, we have chosen the ELSS mutual fund for our investment purpose. So the savings are invested in the ELSS mutual fund. So at the end of 25 years, the maturity proceeds amount to 90.47 lakhs. So after accounting for the capital gains tax present in the ELSS mutual fund, the post-tax maturity value we get is 81.61 lakhs. So this yields an IRR of 10.56%, which is the calculator on the post-tax return. So the accumulated retirement corpus here is double that of the ABSLI Nishchit pension plan. Additionally, you have the flexibility to utilize these funds as you see fit. So this substantial corpus can be invested in a diversified asset class, providing you with regular income. A diversified investment portfolio along with appropriate rebalancing ensures inflation adjusted income during your golden years. So as the ABSLI Nishchit pension plan fails to offer these benefits, you can instead explore investment strategies like this as we have shown for you right now in this video. So what is the final verdict on ABSLI Nishchit pension plan? Is it worth investing or not? As you can see, the ABSLI pension plan combines the savings plan with the annuity plan, where the accumulated savings are later used for regular income. So unlike traditional endowment plans that offer insurance cover and maturity benefits at the end of the policy term, the benefits of the ABSLI Nishchit pension plan vest at the end of the term. So you don't fully enjoy the benefits of this policy. Instead, you receive a regular income which isn't covered under the plan. So the plan suitability is unclear because it doesn't provide details on how the annuity plan works. So even if you receive a regular income from the accumulated corpus, the annuity might not be keeping up with the ever increasing expenses due to the rising inflation. And also additionally, this plan has a high agent commission, making the ABSLI Nishchit plan less appealing to other policyholders. So you can definitely avoid investing in a policy like this. Instead, to accumulate a retirement corpus for your retirement period, You can start by setting clear retirement goals and determining how much you need to save. You need to invest regularly in a diversified portfolio that includes equities, fixed income instruments, and other asset classes based on your risk tolerance. You can consistently review and adjust your investment strategy to stay on track with your retirement goals. But if you do not have the time or the sufficient knowledge on how to customize it or where to invest, and you need professional guidance, then you can definitely consult with a certified financial planner who will be able to guide you through this entire process and make it hassle free for you, making your retirement period even more hassle free and smooth for you. So involving a professional like this will definitely be helpful for you in the long. So you can consult with a financial planner and then proceed with your retirement plan as well.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.